So I'm not sure what the catalyst is in the near term for that trend to shift from what it is, but it feels unsustainably high.
The final part of Blackstone's business, the fund-to-funds business, I'm not sure what it's called.
Hedge fund solutions.
Hedge fund solutions business, now about $50 billion or so in that area. Really, Blackstone was a pioneer in that business in terms of gathering assets, deploying it, and maybe it's also using the current regulatory situation today to its advantage. Can you speak about how that is impacting the fund?
Yeah, so this is a business that started out as a traditional fund-to-funds business, and that business matured, and initially I think it was a gateway for individuals and or high net worth individuals and institutions to find their ways into hedge funds. They just didn't really have access, and that's what it provided. We've always been institutional, not high net worth. But flash forward, and institutions were able to get direct access. And so that need started to go by the wayside a bit. And we really transitioned this business, and I think we're actually the only ones who did this, into a customized solutions business. So we knew we were serving the largest pools of capital around the world, and that they all had issues with varying degrees of return requirement and duration that they needed to invest, risk tolerance, wanting certain things but not others. And so we created a whole slew of product, but also customized accounts for those institutions. And the industry itself has continued to shrink. We've actually never had a year where we've had outflows, which is quite remarkable, and the folks running it have been incredible. So they remain very innovative. They're always thinking about what's next. And I would say one of the bigger opportunities in that business today is to start thinking about the defined contribution market. So pension funds are a huge core part of our client base, but as you would imagine, 401ks haven't performed terribly well. They're very underallocated to alternatives, and the institutions that are holding those assets want an alternative solution. They don't have one, and so we've been talking to a few partners. We're coming up with a product that will have daily liquidity and serve that market. So that's actually a pretty exciting area. But we have products that will focus on commodities or specific sectors rather than just one big fund.
So you have all these great businesses. A lot of the capital is locked up for maybe 10 years. The stock has done well recently, but yet if you look at the multiple, it trades at a lower multiple than somebody like Franklin Resources or Franklin or T. Rowe. What is it? I mean, wouldn't you want to be an owner of a business where the capital is steady for 10 years?
Yes. So we question the multiple too. And especially for me, I spent 2 decades covering financial equities, including the asset management and in the brokerage business. And I look at our business, I just think we have, from a top-down perspective, a gain in shifting towards alternative from traditional assets, and then Blackstone gaining market share within the alternatives. And so even if you had a pretty negative view, it's hard to argue that we won't be able to grow, high single digits, probably better than that in assets. We pay out almost all of our cash, and so recently at our investor day, I did just sort of a mock-up model, just said, I tried to compress as much of the assumptions. I assumed we had margin compression. I assumed we had 8% growth. I assumed we earned lower returns than we did in the past, all of that. And we generated still in excess of $2, almost $2.20 in cash a year over a 10-year period each year, ultimately getting to over $3. And you look at that on a yield basis, and you can get a much higher valuation. That said, the stock's up 40% this year, and so there certainly is greater recognition of the trends. I think the biggest issue is that we went public at the absolute, what turned out to be the peak of the market, both the credit market and the equity market in 2007. Financials following that were the absolute worst performing sector in equities. A lot of the names don't even, a lot of the biggest names don't even exist any longer. And folks were scared. At the low, we were trading at $3.50 or $3.55, even though we had probably $4 in cash. And our assets are locked up, and we're an asset-light model. We had no debt. I mean, it was really mind-boggling. But investors were not willing to assume that any business was viable. And so the questions went from growth to, if you never have a realization again, how long can you survive? And I think today we're shifting back, certainly not peak type questions, but we're definitely shifting back to earnings power, where are the opportunities? But what I really think investors miss is the innovation and the new product development that happens all over finance and absolutely in our company. And so if you're only to look at one fund and say, oh, well, how big can that fund get? You've missed everything that's gone on in the company probably over 25 years, but even since the IPO, a lot of our assets have come in products that didn't exist then. And I think about what we have coming in the pipeline, and that's where the assets will come. So right now we're in the market raising our first Asian real estate fund. We're in a new business called Tactical Opportunities, which looks at deals that don't fall into any of the other areas and takes advantage of disruptions in the market. So providing regulatory capital relief for bank is one example, shipping loans, just something we've done recently, which are high return, something our clients want. But these are just all new asset classes. I mentioned the 401k market where we haven't been, high net worth. So I see a good long trajectory, but I think the entire asset class is very much in a show me mode because it's new to public markets. We're first coming up. These companies have never been public during a realization or upcycle.
Steve Schwartzman, Blackstone's founder, recently put a couple $100 million towards a scholarship fund modeled after, I guess, the Rhodes Scholarship. Can you speak about kind of the feedback that you've gotten and why that came to be?
Yeah, so this is really exciting, and it's Steve's personal endeavor. He is donating and raising $300 million to form Schwarzman Scholars in China. And in his words, China is no longer an elective course, and there's really no gateway for top students around the world to have access. And so he's putting together an incredible program, top professors, and a lot of names you would recognize on the advisory board of that, coming from everywhere, heads of states, former heads of states, top educational leaders, top business leaders from around the world. So it's really, really exciting.
Should we open up for questions?
Yeah, why don't I break in and see if there are questions from the audience at this time for Joan? I should add from my experience in the mutual fund business that one of our dirty little secrets was that although we obviously tried for the best performance in all our public funds for our customers, that a portfolio of all the public mutual fund companies such as Franklin and T. Rowe, Invesco and Janus, and in particular Eaton Vance would have provided a return over the past 30 years much in excess of any of the funds we were selling. And so you might keep that in mind in considering Blackstone as part of your portfolio. But having said that, I'll see if there are any questions. I don't see any, so David?
I have a question. So when senior executives are sitting around the Blackstone conference room, it's the top 5 or 10 people, what's the one macro concern that keeps you up at night? I mean, is it rates rising? Is it the growth rate in China slowing down? Is it a war? Is it problems in Syria? I mean, What should we think about in terms of what the people at Blackstone might be thinking about?
So it's something we spend a lot of time on. We get a ton of macro indicators just from all of the different companies we own around the world and what we're seeing in the hotel business, which gives you the short-term view, but also office buildings around the world, which gives you a much longer view in terms of leases, et cetera. And I would say an interest rate shock with no growth, which is not what we're expecting, that would be the most challenging environment, I think. Not just for us, but for economies. But mostly what we really talk about the most, I would say, is how can we get the economy growing? What is it that the U.S. government, that governments around the world, that businesses can do to restart the economy, to get jobs growth, to get revenue growth? And that's been quite challenging. So we spend a lot of time on that. I think it's fair to say that gridlock hasn't been the healthiest, even though markets are up and assets are inflated from an economic growth point, from just the human element of employment. It's been disruptive, and not just here. The same is true in Europe and elsewhere.
Evans?
Well, congratulations on the Schwarzman Fund. I am an advisor to the Tsinghua University Foundation Board, so I did see money coming into UBS from Caterpillar of the world, so congratulations. Now, for a lot of Simon students here, they are just curious how a private equity fund like Blackstone is run or being managed in terms of the asset class that you want to get into, what type of allocations. So can you just run by us what kind of opportunities there are for young grad from MBAs, and ultimately, what is the decision process? For example, the last I heard is Blackstone is going to invest $4 billion in real estate in Asia, and in particular China. So what drives the process? How many senior partners, or what's the whole process? Can you just describe us for our benefit?
Yeah. So for each of our businesses, we have one global investment committee. So it doesn't matter if you're investing in the US, Europe, China, Brazil, wherever. It's the same investment committee. It's the same investment process. And the investment committee consists of Steve Schwarzman, who's our CEO, Tony James, who's our president, and then partners from the different businesses depending on what that business is. We have a CIO in private equity, but other deal partners rotate on and off the investment committee. And it's a pretty incredible process. So as you would imagine, it's a big funnel. A lot of deals come through. Every Monday morning, we all meet. Everyone from the most junior person to the most senior person is in the room or up on the screen if they're not in the New York office. And we go through every deal that the teams are looking at. We go through any issue with a portfolio company and any potential sale that's about to happen. After whatever period of time, due diligence, that group will then move to review committee. And you can go back to review committee several times. So you have your memo in advance, you have all of your assumptions for earnings, what it is you think your edge is, what you think you can change, what the risks are, where you think the returns might be. Oftentimes you come out of review committee with a lot of questions you need to answer, with the deal slightly changed. It's very much a consensus-driven process. And eventually, fewer deals get to investment committee, which is a 4-hour meeting focused on one particular investment, and you're going, doing a much deeper dive with the same group. So that's pretty much how it happens. Each private equity partner is tasked with focusing on a different sector. Some of them have multiple sectors. That's in the US. I would say in Europe, in Asia, it's more country-based, so they tend to be more generalist, and then they draw expertise from New York. Sorry.
David, you have
Sure. I guess final question for me. You mentioned shipping loans as an area that Blackstone was recently exploring and investing. What's the appeal of shipping loans?
And so the appeal in this case was that, sorry, I'm going to have to.
Sure.
Is there water somewhere? Anywhere?
I don't.
Okay. Thank you. So the appeal in this case, and it could have been really any loan, but a bank needed regulatory capital relief. We were able to diligence the loans and purchase them at a price such that we were able to, generate a high teens return with minimal downside risk. So that was just one example of the type of thing that we're doing in that tactical opportunities area, where the goal is to just look, what are the market disruptions, where can we intervene with capital, with expertise. We had a strong structured group working on it, and they came up with a creative solution. So
I think we're at our time limit.
Okay. Thank you very much, Joan and David.
thank you.
Thank you, Ron, Joan, and David. I want to thank our sponsors who really helped make this event possible. Recognize one in particular, Ed Ackley, who's our title sponsor. Ed, if I can have you stand so we can give you a round of applause. Ed's a two-time alum, has been a generous supporter of entrepreneurial activity at Simon and for the U of R. He and his wife are the supporters of the Ed and Agnes Ackley Executive Professor of Entrepreneurship. Dennis Kessler is our Entrepreneurship Director, and Dennis is somewhere here in the back. So we're proud to have him down and on board through Ed's support. The next event will be our 5th annual conference, May 8th at the Hyatt next year, so put it in your calendar. Suggestions on speakers, we'll be looking for your feedback on this event. Our motto is ever better. If we can help in any way to the alums, supporters, friends that are here, let us know. We've got lots of good talent. 100 students came down. There were some plane delays, an errant bus yesterday that got lost, but thankfully they all made it. So if we can supply some top talent for you, please let us know. And if we can educate your employee base, we now will have 2 programs here in the city. You're welcome to take a tour of our new facilities in Times Square that we do every other weekend. Our next information session is Thursday, May 16th. And then an open house Saturday, May 18th. So if you know of anybody who'd be a great fit for one of our programs, please let Janet Anderson know, who's also in the back. We look forward to seeing you next year. Enjoy the weekend. Thank you for joining us, and wish you Meliora.